Hello, I'm Greg Hunter. Thank you for joining us today on USAWatchdog.com. Today, a new guest, James Turk from GoldMoney.com. Now, James Turk is an expert in banking and finance, but he is also one of the best connected, one of the best read, one of the most knowledgeable people in the gold world. That's why he has GoldMoney.com. James Turk, thank you for joining us today on USA Watchdog.
Thank you, Greg.
Well, I mean, we were talking just off camera a few, minutes before we were on, and you're up there. You're up there with Sinclair or Sprott or any of the guys that have the pulse on the gold world, and you really have to know it all. And I don't mean to. I'm not trying to patronize you, but you have to know about bonds. You have to know about central banks. You have to know about supply demand. You have to know about mining. You have to know about all if you're going to make any money in the gold world. Otherwise, you'd be poor.
Yeah, gold is money, and that means it's at the center of civilization, at the center of our society. So you have to look at things like interest rates. You have to look at the other currencies that are out there, and compare gold to these other opportunities. And once you can do that and have a grasp of that, you should be able to figure out where gold is going. But it's also very simple at one level. If central banks are debasing their currencies, and that's what they're doing all around the world with quantitative easing and other programs, buy gold. Gold's got a 5,000-year history. Central banks have a 40-year history of managing money without any kind of gold backing, and you can see who's winning the race.
Yeah, I'll put my money on the arcane, barbarous relic, as they say. Listen, I want to get into gold. We finally had a pop this week in gold. And I tell people I tell people just look at it as a core asset, look at it as an insurance policy. I do not sell gold on my site, but as you said, I'm covering the news, and they're debasing currency, and the big story of our lives is what they're trying to do to keep from collapsing. And there was talk on the internet about they're going to push it down to 1,100. I thought if they could have done that, they would have done it. And tell me if I'm wrong. I thought that other central banks are buying this stuff, and it got to 1580 or 1570 or whatever it got, 1568. I don't know. In this latest run, they started buying it. I think they were freaking out that they want to get this gold in their coffers from LBMA, COMEX, whatever. Am I wrong?
No, we don't know all of the announcements as to who is buying, but South Korea did announce that they had purchased some gold when it was down here under 1,600. And I believe that there are other big investors and perhaps other central banks as well. With regard to that 1,100, or the number of people said $1,200 on the gold price, in theory it's possible, but for that to happen, you'd have to have the U.S. dollar money supply contract by about 30 or 40%. And that's the only way it will happen.
That's not going to happen.
And Mr. Bernanke is a committed inflationist. He's so anti-deflation, he's willing to risk hyperinflation, in my view. We're on this path to hyperinflation, given what, the policies that we're following. So I just don't see, gold going, it could bounce around a little bit, but support under 1,600 is pretty solid. And I think we're going to be heading higher for the rest of the year.
Do you think we put in a major bottom right here, right now, with 15, the 15s, the high 15s?
Yeah, I really do. And the reason is that gold is very good value. It's good value in two levels. Numerically, my fear index and my gold money index show, just from a numerical basis compared to past experience, that it's very good value. But we also know it's very good value simply because it's money outside the banking system. It doesn't have any counterparty risk. And that's very important as this financial crisis continues to unfold. We've had a rolling financial crisis now for a few years. The crisis isn't solved. We still have some, I think, horrific things to come.
Such as? Let's stop. I want to back up right there.
Well,
horrific things to come, such as?
Such as another Lehman Brothers collapse. The banks are still very fragile. Countries are still way over leveraged. And what this is resulting, in my view, is ultimately, the destruction of currencies. And that's why I think the U.S. dollar is going to go over the cliff, which is the theme of the book that John Rubino and I wrote back in 2004, The Collapse of the Dollar. We're still heading in that direction, given the policies that are being followed.
Well, I know you read a lot of information, and Bernanke, and it looks like Janet Yellen is like a top person at the the Federal Reserve to take over for Bernanke, and they're both in these this 1937 mentality. Where we're in 1937 in the Great Depression, we had this big dip, and they don't want to be branded as allowing this dip to happen. But aren't they coming up and concocting a brand new scenario that's never happened before? I mean, do they know the outcome of what they're doing?
Well, nobody knows the outcome of what they're doing because we cannot predict the future. And, who knows? They may change their minds at some moment in time and head back in the right direction. But both of them are, committed doves, to use the common terminology. They're both inflationists. And as you say, they're both, concerned about what happened in the 1930s. But you're heading in a direction where you can't avoid the problems. You have to go back. The U.S. has been living far beyond its means for too many years. We have to accept that reality. There's just not enough wealth being created to handle all of the government promises and the government payments that are being made. And either we have to cut back on government spending or the dollar is going to collapse given the policies that are being pursued. Those are the two choices.
You're in the UK, and what are you
Yes.
seeing over there? I'm hearing that the UK inflation rate is really starting to pick up, and they've printed a lot of pound sterling to try to stave off their collapse, their rolling collapse, as you say. What's it looking like across the pond in the UK and maybe even in Europe? Are things getting better in Europe? Are things getting better in the UK?
No, they're not getting better. They're not getting better in the UK. They're not getting better in Europe. And we have a horse race going on between the pound, the euro, the yen, and the dollar as to which one's going to lose the value the first or the most. From time to time, it looks like the dollar is winning the race, but now the yen is winning the race. But the British pound is not far behind. The euro is sort of in a temporary zone. It's still, I think, basically benefiting from Mr. Draghi's announcement last August that he will do whatever it takes to save the euro. But there's a groundswell of support developing in Europe that is shocking the political establishment. I mean, we saw it in Italy with the election there. We saw it here in the UK, one of the what they call a by-election. It wasn't a major election, but a seat became available. And the UK Independent Party, which is run by Nigel Farage and is very Eurosceptic, came in second and had more votes than the Conservative Party, Mr. Cameron's party. And that sort of shocked things here. And we've got a potential shock developing now in Germany. For a long time, Germany has resisted creating a political party that would be anti-Euro. But
nobody asked them to bail. Nobody asked the German people, hey, we'd like to have you bail out Europe. Is that okay? Nobody asked them. People are like, hey, wait a minute. We've seen this play before. It produced Hitler.
Yeah, that's exactly right. And the reason why it produced a Hitler is because the politicians had control of the central bank. And it's interesting that the German Bundesbank still very carefully guards its independence. And the reason is, after the Allies created a central bank in Germany after the Second World War, they made sure that it was completely independent from the political process, because in order to fight a war, politicians have to have control of the central bank. So after having fought 2 world wars, the Bundesbank was created completely independent from the political process, and it still is. And so, for example, if the German government wants to borrow debt, the Bundesbank's not obligated to buy it, as the Federal Reserve basically does, or the U.S. banks do with the assistance of the Federal Reserve, because if you give money to a government, or the ability to create money out of thin air, you're giving the government power. And we saw that in the case of the 2 world wars, and that's why the Bundesbank is completely independent from the political process in Germany. And people are starting to recognize that the ECB is a political animal, that the euro has become politicized. And when a currency becomes politicized and is no longer in the control of the people and in the control of the politicians, you start to see things that are not in the best interest of society.
Does Europe crack up this year? I mean, they have, Italy, there's problems, Spain, problems, like to your point, UK, which is pound sterling. It's not in the, euro. But does Europe break up first? Does Europe have a big collapse first?
I'm surprised it's gone as long as it has. Again, you just can't predict these things, but it could break apart next week. It could break apart in a year. But it is ultimately going to break apart. The question is, how is it going to break apart? And this new movement in Germany suggests that, well, maybe Germany will pull out of the euro with a couple of other like-minded neighbors, perhaps Austria and Slovakia, maybe Finland and perhaps Holland as well, and create their own northern euro or a new currency that will be managed the way the Bundesbank used to manage the Deutschmark.
What about all the gold moving from west to east? I mean, the LBMA. I mean, the people in the Asians are now buying contracts and saying you can roll it on out here on whatever the last day of the month. We'd like to have our gold. COMEX, the same thing. Are we going to have some epiphany moment at some point when either the LBMA or the COMEX says, hey, we got to pay you in cash. We don't have any metal. I mean, the London Bullion Market Association, it's not the London Futures Market Association, even though they treat it that way. It's a bullion market. And if they run out of metal, doesn't that mean the price goes to cash and up in a hurry?
Yeah, there could be a force majeure declared here. The COMEX would probably be the most vulnerable. But, the big players recognize that they're never going to take delivery of gold on the COMEX because the COMEX will just say, no, you can't have it. It's sort of the reverse of what happened back in 1980.
Wow.
During the Hunt Brothers thing. The COMEX is run for the benefit of its members. It's benefit for the people who are, active in trading on that. And so they need to keep that gold there to give it some credibility. And the big players are never going to take delivery in the COMEX. They also don't want to take delivery in the COMEX because people don't like to store their gold in the United States because of the confiscation back in the 1930s. They much prefer to store it in other parts of the world. But London, the market is an over-the-counter market. The LBMA is an association, London Bullion Market Association, of a variety of firms and traders that interact with one another over the counter. And it's quite possible that one or more of those firms may become overextended. If it becomes overextended, then that one firm could declare a default. But would the government come in and help? Yeah, they probably would. But would the government then give whatever reserves are left in the Bank of England to that bank so it would make good on its commitments? I think that would create a political uproar here in this country, given the fact that people are still complaining about Gordon Brown selling half the gold reserves at the low of the market, 12 years ago, the so-called brown bottom.
Well, tell me about your price targets for gold. You just said at the beginning of this interview, we think it's going to go up the rest of the year. Where are we at on December 31st, 2013?
We'll be over. Last year I thought we were going to be over $2,000.
Well, we almost were.
We almost were, yeah. This year I think it's probably a much higher probability that we will be over $2,000. And it may not be by December 31st. I mean, it could happen within the next 3 months, given what we see developing in the market at the moment. There's very good physical demand. This last little takedown has not shaken up the physical metal, I think, that the shorts were hoping to shake out, because there are no weak hands in the market. When you go through an 18
central banks.
Yeah, exactly. When you go through an 18-month correction, like gold has been through, the weak hands are out, and now the metal is held by strong hands. And the important thing, Greg, is that there are two sides to the gold market. There's the physical market and there's the paper market. And the way I like to explain it is that normally the paper market is the bigger of the two. So it's like the body of a dog, and the physical market would be the tail. And normally the body wags the tail, the paper moves the physical. But every once in a while, when you get tight conditions in the market, you get the tail wagging the dog. And that's what we've been seeing here over the past few weeks. and that's why I think you've got a low in the gold price, at present levels. It's not unlike what's happened a few times before over the past 10 or 12 years. Eventually the market gets sold out, punched out, it can't go any lower, and it finally turns. And the reason why it turns is that gold is still very, very good value.
And that's where we are right now?
Yeah. I think we're actually in the process of turning. And it's good that we've seen an update today. We still have a little bit of resistance at 1,600. But once you're over 1,600, then I think you're going to see the momentum players jumping on board, and then the paper market's going to start driving it higher.
Where do you see this going in the next 3, 4, 5 years? I mean, I've heard everything from 17,000 to 8,000, 10,000. It's going. In your mind, is it going much higher?
Yes, it is. And unless there's a change in policy at the Federal Reserve, and I don't see any indication that there's a change in policy. I use mathematical formulas to put a price on gold, and I look at historical performance and make a comparison as to what's good value and what's not good value, or when does gold become overvalued. And the two that in the formulas that I like to use are called the fear index and the gold money index. They're both numerical, so they take out all of the emotion. And back in 2003, I was interviewed with Barron's, and they asked for my forecast. And I was saying that by 2013 to 2015, because I was expecting the financial bust that we were already in 2003 to finally unravel in that kind of time frame, that we would see $8,000 on the price of gold. But I'm now of the view that, based again on my models, that at 11,000 is fair value. And typically, you go above fair value when a bull market finally ends. So, those are the kind of numbers that I'm looking for. And whether it happens between 2013 and 2015 or a few years after that, I don't know. The point is that by owning physical metal, you're preparing for what looks like going to be a collapse of fiat currencies. In fact, I call the environment that we're in a fiat currency bubble.
So you think within the next 5 years, probably see 11,000 gold?
Yeah, and it could happen sooner. You just can't predict. It depends on, when confidence finally breaks. And we're getting very, very close to that stage. The confidence, you can see it eroding, day in and day out. And there's nothing holding the dollar together anymore except confidence.
James Turk, goldmoney.com. Please come back on usawatchdog.com, will you?
Yeah, I'd like to do that, Greg. Thank you very much.
Hey, thanks for joining us over there from across the pond in the UK. Thank you very much for being on USA Watchdog.
Thanks, Greg.